Hello, it's me, Steven, the calculator guy, and today we're going to talk about Hubble exchange and funding rate arbitrage. So right now you can get around 35% APY on Hubble exchange utilizing a funding rate arbitrage, but I want to tell you what to look out for, what the risks are, how to enter, when to exit, all the things you would need to know to get started now. If you're in the DeFi Dojo Discord, you've known about this for a couple months now because we've been talking about it and utilizing this strategy, but there's kind of a statute of limitations where I can then make these strategies public. So if you do want early access to these strategies or to talk about these strategies, we even have a funding rate arbitrage thread where we talk about all different types of funding rate arbitrage and opportunities all across DeFi, which is just one of the many, many amazing things we do in the DeFi Dojo Discord, which is the greatest decentralized think tank in all of crypto. We have people from all across crypto: Pika, Friends, Byte Masons, Crypto Crew, DopeX, DeFi Llama, Osmosis, Granary. So if you want to come hang out with those incredibly smart people and the incredibly smart community members, then I highly recommend joining. The first month is completely free. If you don't like it, leave without ever paying a dime. All right, I'll get off my soapbox. Really, it's an amazing place. Okay, now, two things you need to know about Hubble Exchange. One, the mark price and the index price and what those two things mean. And that's true for any decentralized perpetual exchange and how that affects the opportunities. When the mark price is above the index price, shorts get paid, right? They get paid the funding rate. Now, the funding rate is just an interest rate that attempts to get the mark price back down to index price or mark price back down to peg. The mark price is the value of the asset. You can think of it this way: the value of the contract, but the value of the asset on this exchange. So right now, AVAX is being priced at 13.84 cents on this exchange, where the index price, which is the real price, you can think of it, is at 13.61, which means shorts are getting paid because shorts are incentivized to open positions to bring this mark price down. Now, when the mark price is below index price, longs are incentivized to open positions to bring the mark price up. The mark price has consistently been above the index price here, which has made for some pretty excellent strategies. So let's look at those strategies. Right now, if you open a short, that's fantastic, right? Let's say you open a short and then the mark price goes to peg. A bunch of people open the short, you're early, mark price gets down to index price. Well, if you were delta neutral, you just made money off of arbing the difference between the mark price and the index price. Congratulations. So right now, opening shorts makes sense. Now, if the mark price goes below peg, that's also good because now you can exit at a premium. Let's say you buy now, mark price goes below peg, so you're not getting funding rate anymore, but now you can exit at a premium. So it's a win-win situation in that respect. So, but let's talk about the funding rate arbitrage, probably what people are here. If you just want to play the mark price index price game, it's not really a winner's game. Very difficult to predict when the mark price will reach the index price, but I digress. In wallet, you can sort of see my currently open position here and how much I've made in funding. I've made about $757 in funding through the course of my position, and it's very easy to open this position. You just need AVAX. So you bring in a number of AVAX. I have 542 as collateral. That's my collateral, right? That's my long position. Whenever you buy an asset, you're long on that asset. So 542 is my long position on AVAX, and it's also my collateral. Then I go over to markets, and I short. You click sell to sell short, buy long, sell short. Click sell, and you do market orders only, unfortunately, and 542. Oh, numlock, 542. Now, it should tell me the, sometimes it does. Okay. Leverage, it tells my liquidation price. You will not get liquidated there because as you get closer to liquidation, your collateral is increasing in value, right? As your short becomes more dangerous, which means the value in AVAX is going up, well, your collateral is increasing, which pushes away your liquidation. Oh, sitting on a very hard wallet. So basically, it is impossible to get liquidated unless the oracle of this perpetual contract somehow depegs from the actual price of AVAX. So you open the position, 542 short, 542, you can see my short size right here, 542 short, 542 long, and that's it. After that, if you want to check how much money you're making in funding rate, you would go over to your wallet, Then you go to funding payments, and you can see every hour I'm getting paid roughly 37 cents. So it's 37 cents per hour on a about $8,000 position. So not too bad. We can really quickly look at that, right? 30 cents per hour. So we do that times 24 times 24 equals 7.2. So we multiply that by 365, 2628, and then we can actually just divide that because it's going to go left to right by 8,000. So roughly 32.85% APY, which is pretty good for a delta neutral position that I've had open for quite some time. Now, funding rates can go negative. Not sure if we'll see any here, but it does happen. It's mostly been positive for the past few weeks. Okay, here we go. So it can flip negative. Now, remember, when the funding rate flips negative, what does that mean? When the funding rate flips negative, it means that the mark price is below the index price. And when the mark price is below the index price, that means your short is worth more than it should be, because your short is based off of the mark price. So you could exit at a premium. It means you could close your short position and get a little bit of a bonus relative to your long. So like right now, if I go to my wallet, I can see that my unrealized P&L is 2,490. If the mark price goes lower, my unrealized P&L will increase while my total collateral will stay the same, because my total collateral is based off of an index price, not a mark price. All that I'm saying is when you start getting funding that goes against you, it could be a great time to exit, because you can exit at a premium if the markets are large enough. Now, certainly you want to know like what's the volume. It's 366,000 open interest, 65,000. So it's not a massive market. You don't want to come in here with $100,000 or $200,000. This is better for like $5,000. I mean, 10,000 is pretty much the topish range I'd want to open a position here. Anything more than that, you're probably going to skew the mark price yourself. So just keep that in mind. Now, a few more other things to note. The way you get your funding is in terms of HUSD. So again, you can see here, Hubble USD. Hubble USD is effectively just wrapped USDC. It is backed one to one by USDC. Whenever you want, you can withdraw it. Then you have HUSD. Come over here. You can convert your HUSD into USDC. You can also mint HUSD against USDC. But of course, I would probably be withdrawing and converting into what I want. Now, there's also an insurance fund, which protects this protocol from bad debt, but it's only a single asset market, AVAX. So bad debt is very unlikely, and the APYs are not super interesting. So this APY does range between, I'd say, 3% all the way to 50%, pretty sporadically. So if you want something that probably averages around 12% as a diversity to your portfolio, you could consider putting some HUSD here. However, you have to do your own risk-reward analysis. I can't do that for you. What else? There are referral codes. They're not very meaningful. There are 29 traders, all members of the DeFi Dojo Discord, who have used my referral code, and I have made a total of $9 in fees. This is the total, right? So but you do get discounts on your fees. So if you want, you can use the calculator guy as a referral code. Guys, I'm not making bank off you. I'm not trying to like roll in the money here. Again, 29 traders so far, probably all of them with $2,000, $10,000 positions, and I've made $9 in 3 months. So not trying to exploit your my audience here, but it does get you a fee reduction, right? 10% fee savings. So keep that in mind. Anyways, that's pretty much it, guys. So the cool thing here is funding rate arbitrage. It's best to open when the mark price is most above the index price, and it's best to close when the mark price is below the index price. You enter with AVAX because that's your long, right? If you long that much AVAX and you short the same amount of AVAX, that makes you delta neutral. If AVAX goes up in value, your short goes down in value. If AVAX goes down in value, your short goes up in value, which is very cool because all the while, theoretically, you're getting a nice funding. Now, the funding rate is capped. So the reason why, if you go over to Wallet and look at funding payments, you see it sort of roughly the same 36.21 cents is because they've capped the funding rate to incentivize traders. If the funding is too expensive, no one wants to hold open a long position. And I understand that, but back in the day when we first started playing around with Hubble, the funding rate was not capped and we were getting something like 250% APY. So, you know, I don't mind 36%, certainly, especially not in these market conditions, but it used to be pretty intense. And if you want to find, opportunities like that, again, join the DeFi Dojo Discord. We'd be happy to have you there. And yeah, I think that's about all. This is a very cool protocol. Do your own research on the audits and how you feel about them. They also do trading competitions every now and again. They reward people for trading. I don't trade. I'm not a trader. I'm a delta neutral stablecoin kind of guy. Even through all the FTX collapse and 2 of my positions completely exploding, I'm still up like 2% in the past 3 months on my portfolio because I'm delta neutral, because I'm in stablecoins, and because we do some pretty decent portfolio management and risk management. So if you want to be like us, join the DeFi Dojo Discord. Greatest think tank in all of DeFi. Decentralized think tank. All right. Thank you so much for watching. Have a wonderful rest of your day.